Hi, good afternoon, everybody. For those at the back, anybody want a beer? Put your hand up. Oh, they're awake. They're awake. Okay, just checking. Okay, this statement here, the internet created a global market, however, the world does not have a single currency. I wrote on a business plan before perhaps some of you were born, back in 1997 for a company called WorldPay, which I founded. And that holds true today. Even with cryptocurrencies and various other things, we still don't have a single currency. So what is RTGS doing, and why are we building the world's first cross-border liquidity network? And this presentation is more about education than actually selling you anything. And the reason why we're doing that is a few years ago, I set up a bank in the UK called Clearbank. We were the first new clearing bank for 250 years, and we had to go through learning all about liquidity and leverage, all the things that the big banks have to learn. And one of the advantages of that journey was that it showed me how bad infrastructurally the international settlement and payment systems in the world are, and domestically they're equally as bad. And there's a simple reason for that, and that is the business that we live in, the financial services business, has a historic flaw, and that is that liquidity is invisible. Now, I know within Clearbank what my liquidity position is, but I have no idea what ING's liquidity position is in real time. And ironically, the regulators don't know this either. And liquidity and the absence of liquidity visibility is the thing that acts as a financial friction. It slows down all the transactions that we're wanting to do. It slows down our ability to do real-time interbank payments. And so, the irony is that for me to make a payment to a company in Paris today in euros, it's probably quicker to go to Travelex in London, get a bag of euros, get on the train and come over, because it's certainly not going to take 2 days. Right? And so the cost of liquidity invisible is staggering. I wanted to put a live feed up here, but unfortunately, we couldn't do that. So we did this last week, 22nd of the 1st, and just before I came up, I checked what the live number is. We're at about 180 billion of financial friction costs since the beginning of January of this year. And that impacts every single person in this room. That's the cash flow delay, the cost of delay, the waiting for payment, the where's the payment, phoning your bank up, where is the payment. And we worked this out, not just on our own, but with the World Bank and the IMF, because our initial number was about 2.7 trillion a year. And in a meeting in December in Washington, D.C., they told me, no, Nick, you're completely wrong. It's $15 trillion a year. So it's a huge number. So if we can halve that in 5 years and put $7.5 trillion of cash flow back into the world's economy, that's certainly a prize going after. So how do we do that? And how do banks undertake transactions today if they don't know the other bank's got any money? Well, they send messages to each other. They trust each other. And it's the word trust which led to the Herstat crisis in 1974 and the global financial crisis in 2007, because we really didn't know where the money was. And there's counterparty credit risk, there's systemic risk, there's a whole raft of issues. And believe it or not, banks have to provide capital against this risk. So if there's a way of reducing that capital and improving efficiency and delivering cash flow back into the world's economy, it's probably a prize worth going after. So what are we doing? We're making bank liquidity visible and auditable in real time. And we're building a pretty powerful system to do that on the Microsoft Azure platform, currently running in beta at about 36,000 transactions a second, clearing dollar to Aussie dollar transactions on a Sunday afternoon in 3 milliseconds. All right. So how do you make bank liquidity visible and auditable in real time? Anybody who's in the card processing business, and I founded WorldPay, will know the next slide and go, well, that's very simple. What we do is we lock liquidity on both sides of the transaction. We know the assets the counterparty bank has. So if I'm a bank in the UK and my customer wants make a payment in euros, I know I've got loads of pounds. I don't know the bank in France has got loads of euros. So I lock the liquidity of this UK bank. I lock the liquidity of the Euro bank. That takes milliseconds to do that because we have real-time access to the accounts. And we provide data to the regulators behind this, so there's regulatory audit in relation to the transaction flows. And when the customer, because banks have customers, says, I want to make the payment, we produce a thing called a liquidity block, which is nothing to do with blockchain. It's a complicated timestamp that releases the two locked values of money in euros and sterling and changes the ownership in real time simultaneously. We're going into pilots with this in June. We've got 44 regulators around the world, about 460 commercial banks involved in the pilot. And this time next year, I'll let you know how it's going. That's it. Thank you.